Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on yesterday's action, the NASDAQ continued to move higher and closed at an all-time new high again, primarily driven by the FANG stocks. There's plenty of action going in other segments of the market as I continue to watch this rotation I talked about last week and the leadership change. Very quietly, we're seeing that leadership change. I'll talk about this later in the video. As we look at the S&P, we're moving up toward major technical levels that are also going to provide some resistance as we go forward, but momentum is starting to turn up once again. We're also seeing a positive rotation come back into our short-term database that I've been talking about. The big report yesterday was the ADP employment report, and that came in way short, only up 167,000 new jobs. Market participants ended up liking the report because of the revision in June, up 2 million jobs. So the net was just fine as far as what was being expected for this month. There is something in this report that we're going to have to watch very closely because job growth indeed did slow down, and my expectation is we're going to see this pattern set up for the month of August, September, and probably going into October. We're going to see a flattening of the jobs market. Now, there could be some big surprise on a vaccine or something that revigorates the markets, but we're going to continue to see this market grind out from a fundamental viewpoint. As we look back on Q2, which a lot of these reports are still coming from, ISM non-manufacturing came in better than expected, but once again, all of these looking back reports are better than expected. I don't believe that's how it's going to work going forward. What market participants are going to be focused on in the rest of the week are jobless claims that will be out, expected to show an increase again of 1.4 million. The big number to keep an eye on is that continuing claims. Last week it was right at 17 million. If that number clicks down below 16 million, that will end up being a positive for the markets. Then, of course, everyone is focused on the employment numbers coming out on Friday, which are expected to show a 2 million job increase. As I've been saying, don't be surprised if the unemployment number comes in better than expected, whether the books are being cooked, revisions, there's all kinds of games to be played here, but they're likely to have this come in better than the 10.5% unemployment level that everybody's expecting. We'll see how it plays out. That could be the one thing maybe to help this resistance get hit in the markets. The other fundamental fact that's coming out today will be the Fed's balance sheet. Last time it was at 6.95. It's going to be interesting to see if that increases even further. I've been talking with some associates of mine, and we were talking about, are they going to take this thing to 10 trillion plus? Maybe so. The other element to watch is fiscal side as the House and Congress continue to negotiate this continuing support for the economy. If they come up with another trillion plus, expect to see some sort of matching element come out of the monetary side or otherwise the Fed. They're going to continue to pump this market up. It's not going to end here. And as you can see, there's not even a minor correction. We're lucky if there's a 2 or 3 day consolidation that unfolds. The balance of this week has plenty of action to watch, including 480 earnings reports out again today. There's just a barrage, as I talked about on Monday's video, that we're just going to be hammered with just all kinds of information. Let's go ahead and take a look at the charts, see what they're telling us for Thursday. Reviewing the WaveTech database, as I've been telling you folks have been watching my channel for a while, everything I do on this channel is data driven. It's driven by the models output and all of the technical indicators that I have built over the last 40 years. Most of them came out of 1985, and the models were built in the early 90s and have stood the test of time. One of the things that I continue to be amazed, I've been talking about the implosion of the database. Well, it woke up again today. The markets moved above some key areas, and the daily models started to rotate back in. We got 364 daily 3.2 optimized buys. which about 60% of the database is the best model on a short-term basis. And we got 249 new buys on 1.2, over 600 new buys. There were a net 200 sells, so we had a plus 400. The database clicked from 76% bullish to 77.82. Not a big deal, but it is interesting to see that the 3-2 models are starting to kick back in again. They don't get fooled very much at a high, so that means that some of these trades that were rolling off when we dropped down to 65% are starting to roll back in. So this was not my expectation of the markets. There's still some vulnerability there's still some vulnerability to the database as far as it rolling over. One day uptick doesn't mean much, but it is important to point out that this did happen. Nothing's going to happen on intermediate term basis until we run the servers for the week on Friday night. The short-term models continue to amaze me as I keep expecting to see this rollover, and we're just not getting it. And it's just the same thing when we go through the technicals here in a few minutes. You're going to notice that there is also a recycling of the PPMs is happening. So the market goes through this minor consolidation, recycles, and then we see new trades coming in. We see momentum building. Let's go ahead and take a look at the S&P futures. Now the E-minis have just been grinding in this upward mode. Yesterday's high was 33.23, so we have seen a new high overnight as this market trend continues to develop. PPM1 has turned up, went through its first and second derivatives, which is positive. PPM2 and 3 are trying to turn up, but PPM2 is at 0.23, PPM1 is at 0.28, and PPM2 at 0.23. Basically, anything above 0.25 is an uptrend, continuing to maintain this pattern that I talk a lot about, where we're in this sideways range on these indicators, which is the trend maintenance pattern on the PPMs. Reviewing the weekly chart, we look at the grid for the weekly futures. The R3 number is 33.37. We've been at 33.29, so we're going to move toward that level. If we get above R3, then the next level is 33.60. This pattern is accelerating. You'll see PPM2 is actually at 1.06. This is very robust from the standpoint of an accelerating trend. Reviewing the cash S&P, yesterday's high was 3330.77. R3 is 3336.98, and RXT is 33. That suggests there's another 30 points on the upside. Reviewing the daily cash, the configuration that's unfolding suggests that the key level on the downside, you have to go to the grid, and that's going to be 33.14 to 33.10 for today. Those are the extreme values. My expectation is that we'll see an S1 R2, which would put us at 33.23 to 33.36. There is a strong possibility to print through that R2 and move to R3, which is 33.40 to 33.45. These markets keep pressing the ceiling. The other thing that has happened here is that yesterday I talked to you about the volatility range. The average range yesterday was at 30 handles. Well, we've moved all the way down to 18 handles. It's very hard to gauge right now. As the daily range gets narrower, it will set up a pattern where we'll finally get a correction. So there is some vulnerability in this pattern. The old number used to be if the daily grid dropped under 10, that was a negative sign. There's no new metric right now to measure that. I still expect to see us remain in that range and trade in the range I just mentioned, S1, R2, possibly on R3 for today. Reviewing the NASDAQ futures, so far tonight, 11,144 has been the high. R2 is 11,178. Most likely challenge that and possibly go to R3, which is 11,227. Look for S1, R2 range in this market as well. I've been discussing this over the past couple videos. PPM1 is exploding. It's at 0.50, PPM2 0.19, 0.24, PPM1, 2, and 3. The support in the NASDAQ is at 11,025. That's not likely to be taken out, which is S2 for today. But S1, 11,060. The low has been 11,068, so we've already printed that. The high, 11,126. Look for at least, that's an R1 print. I believe we'll get to R2, which would be 11,158. I want to talk about the leadership change that I talked about in the opening comments. And you'll see this is the spread of IJR, which is the small cap ETF versus the NASDAQ. And we're seeing this bottoming pattern. You can see this indicator is just skyrocketing here. I continue to believe this is a major bottom setting up here. This is something that's going to unfold over the next several months. In just a minute, I'm going to cover the Russell because it's actually breaking out right now and is starting to catch up. Yesterday's action was much stronger than the NASDAQ and the S&P as far as that goes. So that small cap leadership that I've been talking about for some time is really important to happen if this market's going to continue higher. And as I've discussed over the past several weeks, there's a high probability that we ultimately will see an all-time new high in the S&P. That suggests that the small caps will continue to play catch-up as we go forward. Ultimately, what I would expect to see the NASDAQ and the S&P stall, and then the mid-cap and the small-cap indexes start to play catch-up. Looking at the Russell cash, yesterday's action did get a close above the RXT, which was 1543.12. The close was 1546.25. So that does suggest we could see a flat to sideways range for a couple days. The momentum that is being signaled here is suggesting that we will continue to see edging higher. If we look at the market grid for today, the upper end of the range is between 1557 to 1567 basis the Russell cash. So expect to see this market stay positive here and ultimately be able to move much faster than the others.